NewFinance. This is another one of our, well, actually our first kind of open mic night in New York. We thought we'd try something a bit more relaxed. But I've got some people waiting on Skype. Let's see if we can bring them in. Hey, Nektarios.
Hello.
Nektarios is a good friend of mine back in London running the StartupBootCamp. Nektarios, take it away. Take it away. You're on Skype and you're live here.
Excellent. Hi, guys. Thanks for the opportunity to talk to the group. I'm actually really keen to talk to you because I want to pitch something to you, which is a pitch day. I run an accelerator in London called StartupBootCamp FinTech. It's an accelerator in the traditional sense that we try to attract startups to come and spend 3 months with us to go through very rigorous mentoring, lots of support, lots of exposure to funding and to business relationships. And we're looking to attract startups that are in the fintech space in a very kind of broad definition of the term fintech, anything from something that's targeted towards the retail market and consumer, all the way through a B2B play, anything to do with enterprise, sales, authentication, identity, technology, you name it. If a bank will benefit from it, we're interested. The program is at the moment ramping up, so we're promoting the program around the globe. And we're really going into various locations globally to be locally there present to talk about what we do and get startups to come to us and for us to get to know them a little bit earlier and a little bit better than we would do just through an online application. And we're coming to the States and we will be on the East Coast in June. So we will be running a pitch day in New York on June 6th and in Boston on June 9th. And it's an invitation, if you run an interesting startup or if you know somebody who does something in that space, please have a look on our website. It's startupbootcamp.org and apply, because it's a good opportunity for us to get to know each other. It's an exercise for us to pre-select startups. If you like a team, we invite you to selection days, and then we pick the 10 teams that will come into our cohort on the 11th of August. So this is overall the program. We're funded by MasterCard, Lloyds in the UK, Rabobank in the Netherlands, and Sberbank, which is the largest bank in Russia, who have a $100 million fund focusing on fintech investments. And we're growing a group of investors. And we have an amazing team of mentors together that come from entrepreneurial world, from the financial industry, from the investment space, who all know what they need to do to help the 10 teams in our cohort succeed. I think this is us in a nutshell. It's great talking to you. I don't know if you have any questions. I don't know the format, if the format allows for questions, Eddie.
Sure, we can take questions. Does anyone have one?
No, just a question in terms of what size, like what stage of startup are you looking at?
Good point. We're looking at reasonably early stage teams. So what we expect is a team, i.e. more than just one person. And we want something like a prototype or a minimum viable product. But the people that usually come to us are people who haven't raised seed money yet. So people who, at the end of the program, would be receiving their first seed round. And on average, the teams that come through Startup Bootcamp received around 400,000 euros of seed funding.
Is there anything else, Nektarios?
That's all from me. It would be great if you come and see us when we're in New York. Other than that, drop us a line if you have any questions.
Okay, thank you very much. Bye.
Thank you, guys. You have a good one. Take care. Cheers. Bye-bye.
Okay, that's cool.
Hey, Eddie.
Hey, George, can you hear me?
Yep. So, hello from London. It's now midnight here, so forgive me if I start to slur my speech a bit. I haven't had my coffee. But I'm going to talk about what my company does. Derivitec is all about derivatives analytics in the cloud. We are a team of 3 at the moment. Myself and Mark Tuckmantle, both from the investment banking side. Matthias Alton was on the buy side at Schroders NewFinance Capital, where he was CTO. Our mission is to be the main provider of cloud-based derivatives analytics to the financial industry. And what we've been doing is establishing a strong platform geared to our clients' needs, trying to get early domination in the market, and producing an application which allows us to rapidly scale out by asset class and financial sector. The target market is small to mid-tier hedge funds, really looking for cost-effective derivatives analytics. And this is really comes into the way the whole offering application works. Over half of hedge funds actually have less than 100 million assets under management. They're actually small. And about 70% of those funds trade derivatives. Now, that can be anything from futures up all the way up to exotics, but that's actually a large target market when you consider the range of people out there who perhaps would not be so interested in a full license model and expensive initial software solution. So, what do we provide? Well, essentially, we provide a portal supplied from the web. You can think of it rather like the Azure portal. We pull in market data from authenticated providers, Thomson Reuters and XIgnite in this particular case. We pull in portfolio data, which of course the clients are providing themselves and setting up. And then the portal churns out risk reports, which can be geared to the client's needs and allows them to do analysis and drill down to understand exactly how the risks work in their portfolios and how they're calculated. The important point is really the stuff in the red that you pay as you go. So it's an on-demand model. We're passing on the model of the cloud that if you don't want to use so much of our compute service, for example, in 1 month, then you don't have to pay as much. If you want to have more people using it another month, you pay more. So if you don't like using it at all, don't pay at all. It's as simple as that. There is no lock-in. So I'm going to quickly flick through some slides. Normally I would do an actual live presentation, but as I've only got 5 minutes, I thought it'd be easy just to flash up some slides. So really kind of the use case is, you register on the portal, you want to start setting up some derivatives portfolios. Now you can either do this by setting up a portfolio, putting in books, putting trades into the books, and the usual long-winded trader experience, or you can take one that you've already prepared in Excel, or albeit mapped to our template, and just drop it into the app. So there's a very quick way that you can get up and running. And once you've done that, bang, you just kick off. You can run analysis on them. We can distribute these calculations over multiple machines in the cloud, feeding them from queues in MongoDB. And we provide, the sort of reports that you'd be interested in looking at: canonical risks, the so-called Greeks, concentrations of risks, concentrations according to maturity, strike buckets, and really this list grows according to what clients want to see. And then you drill down, right? So then you want to understand what's going on. And so you go down to the book, you go down to the trade, you go down to the asset, you can go further into the trade itself, finding the details, exactly how this thing was calculated. In this particular case, an equity option, where was the forward, where was the vol? Why was the asset like that? Drill down, in this particular case, Microsoft, and further. What did the vol surface look like? And by the way, that market data is provided by us out of the box. We have an overnight process. It takes in raw data, produces this derived data, and is provided to you at no extra cost. And then once you're happy with that, go off and book some more trades. Now you're actually up and running, and it's kind of becoming a fully fledged portfolio management system. And then you can schedule your overnight risk runs, and then when you come in on the next morning, you just view the history of that and everything you've actually run on that, and then you drill down and the process repeats. So what we're trying to do is, and of course you can cut the risk however you like, right? You can pivot very easily just by moving those nice little buttons around at the top. So if you want to look at your risk by asset, you can do that. You want to look at it by trade, by book, just move it around. It's very quick. And when you're happy with that, export it to Excel and mail it to your client. Sorry, not your clients, your colleagues, I should say. Well, maybe your clients. So the basic idea is you can pull stuff in, you can push stuff out. So we're trying to make really the experience of running analysis on derivatives portfolios as easy as possible, as low barrier to putting this stuff in. We don't care whether you're operating on an Apple operating system or Windows operating system, because guess what? It's all browser-based, and all you basically need to make this run is a reasonably modern browser. So don't use Internet Explorer 6, for God's sake. We won't even actually allow it. But if you have Chrome or Firefox or Safari, whatever it might be, then you can be up and running with this. Now, that's coming soon, so keep an eye out for riskportal.derivitec.com. We're focusing on equity derivatives and flow rate products for the moment in the US. And we're providing a small selection of reports, but the scope is unlimited. Basically, clients tell us what they want, and we get it back to them. You log in, and it's there per user, per month, and there's no contract and no lock-in. The site is going out at the end of this month, so it's good timing, and I think we're basically on track for that. And yeah, I mean, you just you log in. It's a 30-day trial. Play around with it. Get back to us what you like, what you don't like, and what you would expect to have in this if you wanted to integrate this into your institution. By the way, this application doesn't really care about whether you're an institution or whether you're an individual trader. It's log in, form your group, and you're away.
Thank you, George. Does anyone have any questions for George?
Who would you say your competition was? Looking at your description, like OpenGamma comes to mind. Are you playing the same kind of?
Every time I present, I get asked about Kirk Wiley and OpenGamma. They are very different, actually. Kirk and his team are really targeting the higher end of the buy side with their open source model. So they're more of a sort of consulting type model where you pay, I think it's like a 3-year contract with them to basically have people come in and help you install that open source platform in your institution. We are completely the opposite end, right? We're looking at small to mid-sized funds. We don't have people installing anything for you. We don't have consultants going out to you. It's a completely different model. I think to answer your question about direct comparables, a company called StatPro, which operates in the asset management space, is pretty close to that. They have a product called Revolution, which is very good. Again, it's pay by month. You scale up, you scale down. It's focused on Delta One portfolio management. We have a good relationship with them. We are not really competing, but that's, I think, the closest business model to our own. Within the derivative space, there are lots of incumbent providers, super derivatives, FinCAD, numerics, pricing partners, the list goes on, but they're not providing this sort of register and login, cloud-based, scalable model, pay-as-you-go as we are. So I think in the derivative space, we are, I wouldn't say we're necessarily the first to market, but we are one of the first to market.
And are you looking to expand out of equities into other asset classes, or out of the US and into sort of European equities?
Both.
And so on?
It's an excellent question. We have yet to, I mean, frankly, it's kind of driven by what people want, is sort of simple answer to your problem. We would love to be able to incorporate new asset classes, particularly commodities actually comes to mind at the moment. We would love to be able to extend out to non-US. The second is much easier actually than the asset class extension. We can get the European data, we can extend to Asian data if we go to another market data provider. But the 5-year plan is that we are covering the main asset classes in all of the geographical centers of the world.
Thank you.
Hi.
Hi there.
I have a quick question. You mentioned earlier that you have coverage on multiple asset classes. I'm just wondering if you have, apart from providing the derivative analytics views, do you provide multi-class views from an analytics perspective on a portfolio?
Multi-class analytics, you mean to say views incorporating, for example, rates derivatives and commodities derivatives?
Right.
Is that what you're getting at?
Yep.
Yeah, well, yes and no. We provide flow rates, so we're providing fixed and floating swaps. We provide interest rate futures. That's really kind of basically to provide the funding leg against the equity derivative. But we're not covering CDS, we're not covering CDO, we're not covering FX derivatives. So there's stuff that we still need to do in this space. It's really driven by how much market data we can afford at the moment, by client demand, and also I have a strong belief that when we expand into a new asset class, that comes with quant expertise as well. So I need to hire to accommodate that space.
Okay, makes sense. And I think you go with it based on your client demand as to where their need is. A follow-up question to what you said earlier, that you differentiate based on providing analytics, derivative analytics on the cloud. How are you positioning it with the smaller hedge funds in terms of their infrastructure? Is this going through a dedicated pipe? Are there any security reliability concerns that you have to consider? Is that factored into your offering?
Right. So in terms of the security model, we make full disclosure of how that works. Obviously, we adopt best practices, we adopt encryption, and we have proper separation of databases. So, I mean, it's pretty much, I would say, impossible to hack into our system, but we provide full disclosure on that. So, for example, a CIO at another company is, absolutely welcome to have that discussion with us. In terms of the questions about data sitting in the public cloud, we have had conversations with the SEC in the US and with the FCA in the UK about that. The concern on this is it's not that you cannot have your data in the cloud, right? There is concern about personal data, but this is not personal data. So in terms of portfolio level information, no. There is a requirement by the SEC for books and records that the data be allowed to be presented in the US Center. There are agreements, of course, between the UK and the US through a safe harbor. So in the space of what data can or cannot sit in the cloud, that's really not been an issue for us. In terms of the appetite from the funds themselves, it was interesting because when we started out, I mean, our first application was actually a desktop application. We said, okay, the clients keep all their portfolio level information on premises, right? And they'll just use the cloud as a resource for kind of like compute and market data. And the first feedback we got from our early adopters was, that's great, can you put it on the web? Okay, bang. So there you go. It was really that the driver was much more to putting all the information in the cloud to make it an easy experience for them to use, to prevent them, for example, silly things like having to download the software and get IT admin privileges. All that sort of stuff they wanted to cut through. So the driver from the people we speak to, and this is different, okay, between the small and the large funds, is very much in favor of this web-based model.
Thank you.
George, thank you very much. Thanks very much.
Thank you. Good night.
Good night. Good night. Bye. Hi, yeah. Chandrima, nice to see you. I've got your deck up here. This is Chandrima from Crowdfund Magic Guys. Well, I won't steal your thunder.
Okay, thank you, Eddie. Good evening, everyone. I'm really, really excited to be a part of the New York FinTech Open Mic Night. My name is Chandrima, and I'm the co-founder of Crowdfund Magic. Brief about myself: graduated with English literature and law and a keen interest in technology. My passion really is to develop unique incubation programs to accelerate and empower startups. My enthusiasm has taken me to provide funding platforms, white label to universities, to business incubators, or any organizations. And today, being a part of your to network, share ideas, hear from other business professionals, and also explore potential partnerships. So we launched in 2013 August, and Crowdfund Magic provides complete turnkey solution to launch crowdfunding platforms. Right, we all know that crowdfunding is a fantastic tool to bring innovative products to market, being able to offer a wide array of options, be it an equity, lending, reward, or donation. So a customizable white label platform that we provide, which means that it can be built from the scratch as well as white label like the way we have. And you can launch a donation, reward, lending, equity, or a fusion-based platform through our white label solutions. Right, some of the key features are easy campaign uploading, customizable responsive design, social media sharing, robust admin panel, and unlimited campaigns and videos, and you can use your own domain and emails. Not just a white label, but a complete solution, and I'll let you know how if you go to the next screen, please. Right, so we offer you a dedicated IT team, which means you don't need your own IT infrastructure with us. We offer you a crowdfunding escrow and payment solution through our partner StyloPay. The legal and compliance is taken care of by our associated partners, so we get you in touch with them and they then take it from there. And we offer you incubation programs through our partner Incubate London. All Crowdfund Magic users can use the plugin system, and they can participate in entrepreneurial workshops and programs that we have from Incubate London. Right, Kaufman Fast Track and Incubate London are partners, so we run Kaufman Fast Track programs. And again, all Crowdfund Magic white label users can participate in the programs that we run. So the recent collaboration is with Actual, which is a technology which has a strong presence in entrepreneurship trainings. and they participate in hackathons and idea competitions. So what we try to do is we provide an incubator and crowdfunding platform together, so that we provide crowdfunding tools together with the mentoring management system to bring the innovation products to market. These are some of the upcoming platforms which will be launched in a month or two. First by Kaye, which is a film crowdfunding, box office news and film funding. Careercraft Consultants would be university funding projects. Energy.will would be energy projects in a donation and lending. And Incubate Sydney is an affiliate of Incubate London. This will have crowdfunding plus incubation programs. These are some of the resources. Okay, so here we are. If you have any question, please send us an email at info@crowdfundmagic.com. And you can also visit us at www.crowdfundmagic.com for more information. Thank you for listening. And if you have any question, please feel free to ask.
Do we have any questions for Chandrima?
My name is Ramesh. It looks like you're trying to bloom a field of other crowdfunding ventures. So that's an interesting thing to know, I find here. Quick question, in terms of the platform itself, how much of it is, it looks like you have a few partners already on board and some of them are already, can you give me an idea of how much adoption it is user-wise on those white label products out there?
As in, are you talking about the pricing?
No, the adoption of the user base on those platforms. The white label products are built on top of your platforms. What is the adoption you see on those products?
Okay, I mean, the platforms that I just mentioned, they will be launched in a month or two, so they haven't been launched yet. So, I mean, sorry, I didn't understand. Are you asking about the user base?
That's right.
In terms of the area, I mean, the niche areas that we are working on.
So these are all new products being pushed out on your platform at this point, or are they already live and available for?
But they're not live. Basically, in UK, the FCA license needs to be taken for equity and lending. So most of my platforms are waiting for the legal paperwork to be done. So hopefully they will be launched in a month or two.
But the platform itself is available for if anybody wants to come on board.
Yes, the platforms are available. That's right. The white label is available. I mean, the technology part is actually complete. They're just waiting for the compliance to be ready.
Okay, thank you.
Okay, Chandrima, thank you very much. Thanks for dropping in.
Thank you.
Thank you. Bye.